Arguably, 2023 has been a challenging year for the British pound. Now, moving into 2024 and with an election coming up, what could investors expect from sterling? Our senior investment analyst, Marios Hadjikyriacos, has some thoughts on this. Marios, how do you see sterling perform in 2024?
Well, hello, Christina. I think it's going to be a year of two halves for the British pound. And specifically, I think that the pound's performance is going to be decided by a combination of three factors: how the British economy and interest rates evolve, the performance of stock markets, because as we all know, the pound is very sensitive to global risk sentiment, and the outcome of the general election. So let's break those down. The British economy is currently going through a period of stagflation. Economic growth has essentially stalled, but inflation is still really hot. Now, what that means is that the Bank of England might be among the last central banks to cut interest rates next year. And in turn, that might be beneficial for the British pound, especially against the euro and the US dollar. That's where the good news ends, unfortunately, for the British pound, because we also have a general election, and most likely we are going to see a change in leadership, Christina. Specifically, a Labour government is likely to come in, and Labour governments are usually negative for the pound because they usually bring tax increases with them. Last but not least, we have to talk about stock markets, and that, I think, is another source of risk for the British pound. If we are talking about Wall Street, US markets, valuations are already quite expensive, and the assumption by analysts that corporate earnings growth is going to reaccelerate next year seems a little far-fetched to me, considering that we are heading into a global economic slowdown. Summarizing, I think the pound could perform relatively well early next year as other central banks cut interest rates before the Bank of England, but the second half of the year might be more difficult for the pound, mostly because of political and stock market risks.